Good evening. I'm Alex, and welcome to America Headlines. Tonight, we bring you breaking business news, a story that is sending shockwaves through Wall Street and capturing the attention of investors across the globe. Elon Musk, the world's richest man and CEO of Tesla, has just made a bold billion-dollar bet on his own company. This move has not only lifted Tesla's stock, but it has also reignited debate about the future of electric vehicles, the competition Tesla faces, and what this decision really means for shareholders. Let's begin with the headline. On Friday, Elon Musk quietly purchased $1 billion worth of Tesla stock. That's right, a billion-dollar buy-in, personally from Musk himself. The news was disclosed Monday morning, and almost instantly, Wall Street reacted. Tesla shares surged 7% at market open. While those early gains didn't last throughout the day, the stock still managed to close up nearly 4%. And here's the significance. That single-day rise was enough to erase all of Tesla's year-to-date losses. For a company that had been battered for months, this was a major morale boost. Now, it is not every day that a CEO invests such a massive sum into their own company's stock. Analysts say it's rare, it's bold, and it's risky. But it also sends a powerful message. Elon Musk believes in Tesla's future. Dan Ives, managing director at Wedbush Securities and a longtime Tesla watcher, called Musk's move a huge vote of confidence. And indeed, Tesla shareholders needed exactly that. Why? Because this year, Tesla stock had fallen as much as 42% at one point. That kind of drop shakes even the most loyal investors. Ives added that while Wall Street has been skeptical of Tesla's near-term challenges, Musk's billion-dollar purchase might be enough to calm nerves and reassure markets that the company is far from done. Other analysts agree. Some say Musk has essentially put his money where his mouth is. Others caution that while the gesture is symbolic, it doesn't automatically solve Tesla's real problems, such as slowing sales, shrinking margins, and rising competition. So, let's talk about those problems. Tesla has had anything but a smooth ride this year. In the first 2 quarters, sales dropped dramatically. For a company that has long been considered the undisputed leader in electric vehicles, those falling sales numbers came as a shock. Profits unsurprisingly plunged right alongside. Adding to the challenge is fierce competition, particularly from BYD, a Chinese automaker that is rapidly becoming Tesla's biggest rival. BYD has not only matched Tesla in many markets, it is on track to surpass it, possibly becoming the world's largest electric vehicle manufacturer. For years, Tesla enjoyed the position of being untouchable, but that's no longer the case. And then there's the policy side. The $7,500 U.S. federal tax credit for electric vehicle buyers, a huge incentive for customers, is set to expire this month. Once that credit disappears, some analysts worry demand could cool even further. So, while Musk's stock purchase is certainly dramatic, it comes at a time when Tesla is facing serious structural challenges. The question now is, why did Musk do this? One possible reason is simple: to restore confidence. In recent months, Tesla's stock had been under heavy pressure. Negative headlines about declining sales, competition, and economic slowdown were dominating the conversation. By buying a massive stake himself, Musk may be trying to show both Wall Street and Main Street that Tesla's future remains bright. Another reason could be timing. Tesla stock, despite its rebound on Monday, has been trading at its lowest levels in years. For Musk, this could have been the perfect moment to buy in, essentially telling the world, if you think Tesla is weak right now, I see this as an opportunity. And let's not forget, this is Elon Musk. He's never been shy about making bold, headline-grabbing moves. Here's the fascinating part. On Monday alone, Tesla's stock rise added an estimated $6 billion to Musk's net worth. In other words, he made back more than 6 times what he invested in a single day. For most people, that would be unimaginable. For Musk, it's just another day at the office. This kind of wealth movement illustrates just how closely tied Musk's personal fortune is to Tesla. He may be involved in other companies like SpaceX, Neuralink, and The Boring Company, but Tesla remains the crown jewel of his empire. But let's take a step back. Does this stock purchase really change Tesla's fundamentals? On one hand, it's symbolic. It boosts investor confidence, it creates positive headlines, and it shows that Musk is willing to put real money behind his words. On the other hand, it doesn't magically increase car sales. It doesn't instantly solve supply chain issues, battery shortages, or growing competition. Tesla still faces major hurdles. The difference now is that those hurdles are being faced with renewed optimism thanks to Musk's billion-dollar bet. Wall Street, of course, has been quick to react. Tesla AS rally on Monday didn't just lift the company's stock, it influenced the broader market. Tech-heavy indices like the Nasdaq also got a bump, as investors regained some appetite for risk. It's another reminder of Tesla's outsized influence. Despite being just one company, Tesla's stock movements often ripple across the market. It's the kind of influence usually reserved for tech giants like Apple, Microsoft, or Amazon. Looking ahead, what could justify Musk's confidence? Tesla is betting big on self-driving technology. Musk has repeatedly promised that fully autonomous cars and robo-taxi services are just around the corner. If Tesla can deliver on these promises, it could revolutionize not only the company, but the entire auto industry. The company is also pushing into energy storage and solar products, though these businesses remain smaller compared to EV sales. And then there's Cybertruck, Tesla's long-awaited electric pickup, which finally began deliveries but still faces production challenges. Musk's billion-dollar buy may suggest he believes these projects will eventually pay off in a massive way. Of course, not everyone is convinced. Critics argue that Musk often overpromises and underdelivers. They point to years of delays in Tesla projects, missed deadlines for self-driving technology, and the recent struggles in global EV markets. Some skeptics say Musk's stock purchase is less about long-term belief and more about short-term theatrics. They caution investors to stay grounded and not be swept up in the hype. For Tesla investors, this moment is pivotal. Do you follow Musk's lead and double down on Tesla's future? Or do you remain cautious, acknowledging the risks? Financial advisors often warn against making emotional decisions in response to big headlines. Still, many small investors see Musk's move as a green light. After all, if the CEO himself is betting $1 billion, maybe that means something bigger is coming. At the end of the day, Tesla is not just a car company, it's a Musk company. His personality, his decisions, and his willingness to take risks define Tesla as much as the vehicles themselves. And this latest move, the billion-dollar stock purchase, is classic Elon Musk. Bold, risky, headline-grabbing, and impossible to ignore. So tonight's top story is more than just a financial transaction. It's about confidence, symbolism, and the future of one of the most important companies in the world. Elon Musk's billion-dollar bet on Tesla has lifted the stock, energized shareholders, and sparked new debate about where the company is headed. Whether it as a turning point or just a temporary rally, that is something only time will tell. For now, one thing is clear. Elon Musk is all in on Tesla. And when Musk makes a move, the world pays attention. That's our top story tonight. Stay tuned to America Headlines for continuing coverage of this developing story and other breaking news from across the globe. I'm Alex. Thank you for watching America Headlines, your trusted source for news. Don't forget to like, share, and subscribe for more updates.